What is going on, my friends, and welcome back to another video on the channel. Well, in today's video, we are going over Bitcoin, as what we are seeing is starting to seem as if it is the coil up and the, kind of the warning shots that some type of big move is about to happen. And I want to tell you guys what it's going to look like and how we can identify it to the upside or the downside, and of course, obviously, to maximize our gains. So with that being said, of course, what we have been seeing over the last couple of days was that Bitcoin did lose this key level of support right back here, the level of support that we put in on January 31st, to come back down to set a new lower low. Now, this is the first lower low that we have set on this little move to the top side. We were putting in higher low, and we were trying there to put in the higher low. So that is the first warning shot, okay? That's the first warning shot to say that the bulls were not capable of holding up the price. And although we are seeing a nice little bounce here, unless we are capable of setting the new higher high, a resortment back to the downside at this point very possibly could lead us to see some type of push back down to some of these lower $35,000 levels, okay? We always have to accept that that is very possible. Now, considering the fact that we did establish some support on top of this key level of support at $36,300, which is our 0.786 level on a macro swing low to swing high Fibonacci, what we can see is that that is the zone that could push us back up to this new high, right? I mean, we talked about this over on the Twitter. Of course, do go follow me on Twitter at TylerHillYT so you can get these updates in real time. But I was talking about this. Bitcoin's trying its absolute best to maintain above its golden Fibonacci retracement zone. Failure to hold this 36,338 level and recapture the 0.618 will likely result to a fall back to these low 35,000s range. And what you can see is that we got that bounce. We got that bounce exactly where we were talking about on Twitter, and we are looking to make that move without the danger at this moment of this push back down to the mid to low 35,000s. So again, like I said, it now comes back down to, can we go back in to put in the higher high? If at any given point we start to see this thing roll, and we see the price, let's go ahead and take our Fibonacci's out again, and we start to see the price coming back down below this $36,674 level, likelihood is we are going to see this push back down towards the mid 35,000s. I'm telling you, that is what the setup on this thing is looking like at this point, okay? Of course, anything can happen. There can be black swan events, of course, but at the end of the day, whenever we do put in a new macro low and we start to work our way back up on something of a dead cat bounce or possible retracement bull trap, that means that the possibilities, unless we put in the higher high, is that we come down to put in that C of that again, A, B, C correction, okay? So that's on the table, and we need to be very aware of that. Do I want that to happen? No. Am I, flooding the market? No. I'm just talking about what the charts are showing me. But at this point, what do we need to be looking for in order for us to say that we are working our way back up to the upside and that we are not at that risk of seeing that crash back down to, below the $35,000 level? Well, what I would be paying the closest amount of attention to is the daily 20 simple moving average. I like to look at it on my Bollinger Bands, but of course, to each their own. You can just pull up the moving average on the, just as a normal indicator itself. But what we can see is that we are looking at our second attempt at clearing it, okay? Now, what we can see happening back here is that we usually get that first bounce back up towards this area. We see the pullback, we see another attempt at clearing it, and when we fail that attempt, we see the push to the downside. Looking back here, we got something kind of relatively similar, right? We saw this, we tried to get back out of it, we failed to. Once we came back up towards this area, we were unable to get back up to that 20 SMA, and that led to the larger crash to the downside. Now, it's not perfect, and it's not 100%, but it is kind of a similar pattern in which we will see two relative attempts at this area. And considering the fact that we are doing something similar, in which we saw rejection number one, push to the downside, if we start to see rejection number two, and remember, we start to come back down below, say even 36,300, we are going to likely see a larger crash to the downside, which could look like us pushing all the way back to the bottom side of our Bollinger Band envelope on the daily charts, which looks like somewhere around at this moment $33,912. That's what's happened every time, right? We came back down to the bottom side of this Bollinger Band envelope. We saw the rejection, bottom side Bollinger Bands. We saw the rejection, bottom side Bollinger Bands. As you can see, we saw the rejection, bottom side Bollinger Bands, okay? And so that means to tell us that at this given point, if we are not able to go back up and set this new higher high, let's say at $39,000 on a daily close, there is an extremely strong chance that we are going to see these prices start to work their way back down towards these $34,000 to $35,000 levels. Pay attention to how that forms, okay? On the short term, the first kind of hint you are going to get is if, again, we do start to get the 4-hour closes, let's go ahead and say above these recent ones at $38,855. On a 4-hour time frame, frame, if we can make that happen, we've now set the higher high coming off of the lower low. And what we need at that point is just a higher low, which is much easier after seeing the higher high. Okay, but at this given point, we have set the lower low. We may be setting the lower high, which leads to, this kind of rollover effect. Okay. So overall, whenever we look at some things like our daily RSI, we still do have some tremendous room to the upside in order for us to be able to see the growth we're looking for. Okay, this is still very possible. We're not really seeing major bullish or bearish divergence on either side just yet. We are seeing a bit of recovery from what it seems on the RSI. And if we do look at something like the MACD, for example, you can also see that we are not in the worst shape ever here, right? We saw that bullish cross happen, and we are still looking to see a continuation back towards our bullish territory up here. And so if we are able to get this break here, of course, of that $40,000 level, if we are able to go up and break that trend line, break that 20 simple moving average, things are looking much better for us to be able to see some type of larger recovery, maybe even back up towards $46,000, $45,000. All of those things are possible, but it comes down to, can we get back above this 20 simple moving average on the daily charts, and then we break the trend line. Until we do either one of those, we are in the territory to see a push back down towards $34,000, and you should not be ignoring that just because you're extremely bullish like myself, or just because you're extremely bearish unlike myself. Okay, and so with that being said, I am going to be doing major updates on this on my Twitter over the weekend. Even if I'm not able to record, I will be posting updates here because I can do this from anywhere. So do go follow me again at Tyler Hill YT, and don't forget that if you are accumulating Bitcoin, if you are holding these things for the long term, it is extremely important that you realize every time you make gains on Bitcoin, every time you make gains on Ethereum or any of those cryptos, you are losing up to 40% on every single trade to taxes. None of us here like to pay taxes, and if there's a way that you can avoid it legally, you should go ahead and do so, in my opinion. And so with that, with that being said, go down to the link in the description to I Trust Capital. Go ahead and create an account and verify your email. That's extremely important. Once you do so, you can see all of your options to trade tax-free. They are probably going to save people thousands, if not hundreds of thousands of dollars, especially if something like Bitcoin hits 100K one day. That's not something you should be passing out on. And if you are not trading with tax-free accounts, you are losing a lot of money every single time you make a gain. I don't know how much harder I can emphasize that, okay? So go down to the link in the description and the comment section. It is pinned there as well. So overall, that is what we're looking for today. It is going to be very simple, very easy. Going into the weekend, those are the exact levels that you need to be paying attention to. And as they do play out again, don't forget to follow me on Twitter so you are capable of being as up to date as possible. But with that being said, of course, I hope you guys did enjoy today's video, and I will see you all next time. Peace.